The stock market experienced a volatile week, grappling with a mix of positive and negative signals. After a significant sell-off last Friday, the Dow Jones Industrial Average managed a modest gain of 0.36%. However, the S&P 500 slipped slightly, closing down 0.05%, while the tech-heavy Nasdaq experienced a more pronounced decline of 0.58%. These mixed results reflect the uncertainty gripping investors as they weigh economic data, corporate earnings, and geopolitical developments. Despite the overall market volatility, the CBOE Volatility Index, also known as the fear gauge, declined by 0.49%. This suggests that while investors are cautious, they are not panicking. The coming week promises further insights into the health of the economy and corporate earnings, which could significantly impact market direction. The recent performance of the stock market highlights the challenges faced by investors in the current economic climate. With inflation remaining stubbornly high and interest rates on the rise, uncertainty is the name of the game. Investors are left to decipher mixed signals and make calculated bets on which sectors and companies are best positioned to weather the storm. Amidst the market's fluctuations, economic data released this week painted a somewhat concerning picture. The February Purchasing Managers' Index for the services sector unexpectedly contracted, signaling a potential slowdown in economic activity. This news, coupled with consumer sentiment falling short of expectations, has raised concerns about the resilience of the U.S. economy. The PMI, a closely watched indicator of economic health, dropped below 50, the threshold that separates expansion from contraction. This decline suggests that businesses are facing headwinds, potentially from persistent inflation and rising borrowing costs. Consumers, too, are feeling the pinch, with sentiment dipping as they grapple with higher prices for essential goods and services. These economic indicators have injected a dose of caution into the markets, prompting investors to reassess their growth outlook. The Federal Reserve's aggressive interest rate hikes aimed at taming inflation are having their intended effect of cooling the economy. However, the question remains whether this slowdown will be gradual and controlled or morph into a more pronounced downturn. While economic indicators painted a mixed picture, certain companies stood out this week with notable performances. Berkshire Hathaway, the conglomerate led by Warren Buffett, reported stellar fourth-quarter earnings, sending its stocks soaring. Meanwhile, Apple announced a massive investment plan in the United States, signaling its confidence in the long-term prospects of the American economy. Berkshire Hathaway's operating earnings surged an impressive 71% to $14.5 billion in the fourth quarter, driven by strong performance in its insurance underwriting business. The company's cash holdings reached a staggering $334.2 billion, highlighting its financial strength and ability to capitalize on investment opportunities. Berkshire's shares responded enthusiastically to the earnings beat, climbing nearly 4% and reflecting investors' confidence in Buffett's ability to navigate challenging markets. On the technology front, Apple made headlines with its announcement of a $500 billion investment plan in the United States over the next 5 years. The tech giant plans to create 20,000 new jobs, primarily in artificial intelligence, further solidifying its commitment to innovation and growth. This move underscores Apple's belief in the strength of the U.S. economy and its potential to drive technological advancements. Section 4. Tech Titans in Flux. From Palantir's plunge to Alibaba's ascent. The tech sector witnessed a mixed bag of fortunes this week, with some companies facing headwinds while others enjoyed tailwinds. Palantir Technologies, a data analytics company, experienced a sharp decline, extending its losing streak to 4 days. In contrast, Chinese e-commerce giant Alibaba received an upgrade from Morgan Stanley, sparking optimism about its cloud computing and AI ambitions. Palantir's stock tumbled over 10% in a single day, bringing its 4-day rout to a painful 23%. The decline was attributed to concerns over potential budget cuts by the Pentagon, a key customer for Palantir's data analysis software. The company has been a beneficiary of increased defense spending in recent years, and any reduction in government contracts could significantly impact its revenue. On a brighter note, Alibaba's shares surged after Morgan Stanley upgraded the stock to overweight and raised its price target to $180 from $100. The investment bank cited Alibaba's plans to invest $53 billion in cloud computing and AI infrastructure over the next 3 years as a key driver for its bullish outlook. This move positions Alibaba to capitalize on the rapidly growing demand for cloud services and AI technologies, particularly in the Chinese market. Section 5. Trade tensions simmer. Trump's policies cast a shadow. The geopolitical landscape remains a source of uncertainty for investors, with former President Donald Trump's trade policies continuing to cast a long shadow. Trump's recent directive to the Committee on Foreign Investment in the United States, or CFIUS, to tighten restrictions on Chinese investments in key U.S. sectors, has stoked fears of renewed trade tensions between the world's two largest economies. The move by Trump is seen as an attempt to curb China's access to sensitive technologies and protect American economic interests. However, critics argue that such protectionist measures could stifle innovation and harm global trade. The potential for retaliatory measures from China adds another layer of complexity and uncertainty to the situation. The impact of Trump's trade policies is already being felt in certain sectors. PC manufacturers, including Dell, HP, and Apple, are facing increased costs due to tariffs on components imported from China. These costs are being passed on to consumers in the form of higher prices, potentially dampening demand. The ongoing trade tensions serve as a reminder of the interconnectedness of the global economy and the potential for geopolitical events to disrupt markets. Section 6. Looking ahead, key events to watch in the coming week. As investors look ahead to the coming week, several key events and data releases will likely influence market sentiment and direction. NVDA, a leading manufacturer of graphics processing units, or GPUs, is scheduled to report its quarterly earnings, providing insights into the health of the semiconductor industry and the demand for AI chips. Additionally, the release of the Personal Consumption Expenditures, or PCE, inflation data will be closely watched for clues about the trajectory of inflation. NVIDIA's earnings report is eagerly anticipated by investors, as the company is considered a bellwether for the tech sector and the broader economy. Analysts and investors will be looking for signs of continued growth in data center spending, a key driver of NVIDIA's revenue. Positive earnings results and an upbeat outlook from NVIDIA could provide a much-needed boost to the tech sector, which has faced headwinds in recent months. The PCE inflation data, the Federal Reserve's preferred measure of inflation, will be released on Friday and is expected to provide further insights into the effectiveness of the central bank's interest rate hikes in taming inflation. A hotter-than-expected inflation reading could strengthen the case for the Fed to maintain its aggressive stance on interest rates, potentially weighing on equity markets. Conversely, a cooler-than-expected inflation report could fuel hopes of a sooner-than-anticipated pivot by the Fed, potentially providing a boost to stocks. Thanks for watching, trade safe and have a nice evening.